Hello everyone, you're welcome back to my channel. So today, as I promised in my previous video, that I'm going to give you a detailed lesson on internal liquidity and external liquidity. So let's go to the video and then begin our lessons. So what is basically internal liquidity and external liquidities? All right. So when you have a market, you would basically notice that the market moves in a certain direction. Okay, so last time, as I told you in the previous video, as you were looking that price was creating swing lows and swing highs. All right, now I was telling you that the power of three, on the fourth day, price usually does something when you have a swing, especially when it has taken a previous high or a previous low. Okay, and have a swing formed. So the power of three, which is the day 1, day 2, day 3, on the fourth day, we expect it to move towards a certain direction, okay, and take either the high or the low of the day 3 candle. All right. Now, today I want to take you through this lesson for you to get a more refined idea of usually where you would expect the power of 3 to be more effective, okay, looking at your charts. All right, so now we are looking at internal liquidities and external liquidities, okay? So with internal liquidity and external liquidities, for instance, we have a market moving from this direction towards this low, and it goes up into this area, and it comes down to take this low. What will be the next point of call? So basically, the next point of call sometimes is defined by the kind of liquidity that price has actually taken. Okay, so price might have taken a certain type of liquidity, so price would sort to get rid of another kind of liquidity. Okay, so it may tackle this form of liquidity, which may be somewhere here, which may be a fair value gap. Okay, it comes down a little and then it goes back up to tackle this kind of liquidity resting in here. All right, so let me explain this scenario here for you. Okay, so what we call internal liquidity and external liquidity, based on my mentor ICT, the internal liquidity and external liquidity is basically price taking external liquidity, which is the highs and the lows on the market, and the internal liquidities, which comprises of the fair value gaps resting or the imbalances resting inside of the charts. Okay, so for instance, we have a market move towards this direction from a low, comes to form a short-term high here. Now price rallies down and takes down this short-term, the low in here. Okay, so this is regarded as external liquidity. External liquidity in the sense that is a low which has been rated. Now when price reaches a low, the next attention is geared towards internal liquidities, which is the imbalances. Okay, the CB and the BC. Okay, the sell side imbalance and then the buy side imbalances. All right, so price is geared towards seeking for imbalances. So for instance, if price finds any imbalance within this swing here, let's say the fair value gap resting in here, price rebalances it. Now after price rebalances it, our next point of call is to seek for another external liquidity, or price may be engineering liquidity. So it may move towards a certain direction, although you may not find necessarily some form of, for instance, as it has taken internal liquidity, it may go down, which doesn't have any form of external liquidity in here, but it is either engineering or it is engineering more liquidity. Okay, all right, so now price would obviously move towards a direction where, for instance, it may come down into an order block or a breaker, then it reverses into an external liquidity again. All right, so let's go to the chart and see how they play on the chart. All right, beautifully. Let me pull back my chart up. Now you are going to really identify them so well and so beautiful in such a way that when you go to the chart and you are looking for swing highs and then swing lows, which has taken rid of, which has rated either lows or highs, you would see how best you can trade off those highs and lows, considering the power of 3, especially knowing where price would be directed towards. Okay, all right, So now, taking a clear example of this chart you see in here, this small chart you see in here. So now, basically more of your analysis should be on the higher time frame, which is the daily, and then the 8-hour and the 4-hour time frame. Okay, so basically, so I'm sticking with the daily. All right, so that I have more of this will help you know the bias of the day for intraday traders or the scalpers. All right, if you do your analysis on the higher time frame, like ICT always says that if you don't look at your chart from the higher time frame, you are basically gambling. Okay, so let's look at this chart we have here. You can clearly see that price, assuming we don't have any past data from here backwards, now you can clearly see that price moved from this low, okay, this point, swing low in here, and rally up all the way into this area. What do you find in here? You can find clearly or beautifully a fair value gap resting in here. So this particular gap in here, and then this particular gap in here. Now what do you see? Price rallies. What did it do? This high in here was taken. Okay, we assume that this is a high. It's a high in here. It has been taken, and then price, if price is reversing. So for instance, we had the power of 3 formed in here. Day 1, day 2, day 3. Okay, so notice this. Day 1, day 2 is always higher than day 1 and day 2. And now the next day we have is day 3. What do we usually expect? We are expecting that day 3 will take down the low of this one here. And then perfectly it does that. And you can see that day 5, as I told you in the previous video, that obviously sometimes it does that on the day 5. Day 5 came in more lower to even dip into this fair value gap. So now here, what we are saying is that price has taken a high. The next thing we are looking for is, so the high becomes the external liquidity. Now we are looking for price to rally into an internal liquidity and rally up. So now after price has taken internal liquidity, where is the recent external liquidity that price is likely to target? So you could see the kind of candle formation in here, and it was too obvious that price was seeking to tack the external liquidity resting above this high here, and beautifully price rally up to take the high in here, and means that this external liquidity has been taken. Now, in as much as the external liquidity has been taken, what will be your next point of call? You are seeking for internal liquidity. So price drops after it has taken the external liquidity. It drops and leaves this fair value gap in here, this imbalance in here. Okay, so this is a sell side imbalance and buy side inefficiency. So what do you think? And price comes straight into this area. What do you think price may necessarily do? Okay, so in as much as we have an imbalance here, and after we have already taken an external liquidity, so we are looking for internal, and a beautiful one has been created here. This one has already been taken. It has been taken because we have this candle trading a little bit into before it went up to take this external liquidity. Okay, so now we have this internal liquidity resting in here. So price beautifully returns into this internal liquidity. All right, now after price has taken this internal liquidity, what will be our next point of call? So we have to now look for external liquidities. So when you see this kind of chart in here, where does your eye go to? Find, we may have these external liquidities above this high itself, above these highs, and then above this high, you know. But one thing you should know is that price sometimes engineers liquidity, apart from the fact that it may be seeking for internal liquidities. Sometimes price engineers liquidity. So you see this kind of liquidity resting in here. So this is what I in the previous videos I have been mentioning, that this is a low resistant liquidity. Okay, so this kind of liquidity in here can be grabbed quickly. All right, so now we have taken internal liquidity, we seek for external liquidity. So price delve deeper to take down this low in here. Okay, with this particular candles in here, with this wicks, it takes this external liquidity. So now we will look for another internal liquidity. Now watch this. It is not always the case that after price has taken external liquidity, like I drew in the earlier chart. So after price has taken this external liquidity, price may be engineering liquidity for future reference. So here you could see that price was engineering this liquidity. When it comes down to, we have this high in here, which was also formed, you know, to create this trend here. People may say that, oh, this is a trend line, and then they begin to do whatever they want to do. All right, Now, as price breaks above this trend line, it takes the liquidity resting above all this line. So this is a low resistance liquidity. Okay, low resistance liquidity. So the high resistance liquidity is this type of liquidity where we have a low and it has been run. Okay, but this type of trend line phantom kind of liquidity, here we have a low resistance liquidity, which price after it took down this external liquidity. Now watch this, it delved deeper, and it created an imbalance in here for, how do we call it, for internal liquidity. Okay, now price fully closed in on this fair value gap and then closed in here, but never closed below this low resting in here. So it came back in to take down this internal liquidity. So anytime your eye is geared towards, okay, we have taken an external liquidity, now your eye should be geared towards seeking for external liquidities. It has taken external liquidity, so let's seek for internal liquidities. Okay, so we took down this low in here. Now our eye is geared towards where is the next internal liquidity. Okay, if you go down to your smaller time frame, you realize that price either came here because there are some form of internal liquidities resting inside this area. Okay, yeah, you may find something of that sort. So for instance, let me try and go down to my smaller time frame, and then I will find something in here. Okay, so this is where we have our line, and then let's go down to 8-hour time frame and see if there was anything of that sort in there. So this is where we had our internal liquidity. So now beautiful, you can see that on the 8-hour time frame, all this area was also liquidity, although price dipped in a little, but yes, it came down further. Let's go down to our 4-hour time frame and see if there was more internal liquidities in there on the 4-hour time frame. That price had to even go down further. Okay, let's go down to our 4-hour time frame. So on the 4-hour time frame, you could see that beautifully price came in here, there was more internal liquidity resting in here, and then it came down further. Okay, but then it still didn't break the low, and then it came up, it rallied up to take the internal liquidity which was resting in here on the daily time frame. All right, apart from the fact that it took the daily time frame internal liquidity, it also sought to take the external liquidities, the low resistance liquidities, which was resting above here, which was engineered actually. All right, so price rallied above it. So now as it rallies above this, it is an external liquidity has been taken. So more often this engineered kind of liquidity, price rallies further with it, and you could see the rally away from this external liquidities, and then it tackled all this internal liquidity in here, and then we broke down further below this low. After it took down this internal liquidity, it broke down further below this low. Okay, so we were not really considering all the information which was behind this side, but it broke down below this low, and then what do we see? It has taken external liquidity. Where is the nearest action? So now you could see the power of 3 formed in here. Day 1, day 2, day 3 is a low which has been formed, which has rated equal lows. Powerfully, you could see that day 1, day 2, day 3, day 4. What do we see? Day 4. So our day 4 was a bullish, supposed to be bullish day, because we expected to take down this high in here. And in as much as it's taking down this high in here, we are also looking to closing in on a fair value gap, okay, which is taking internal liquidity because it's taking external liquidity. So this one was a very beautiful day. You could have ridden the market so well, beautifully here. And then we have market coming in down again into this area. So we traded into this as the other block because it has taken down this short-term low. So we consider this becomes the other block. Okay, so we have the bearish candle becoming the other block, another other block trading into it, and then so beautifully we have this price trades back into it, and then we have the rejection up. So you could see the liquidity which is being engineered in here as well. So although you may not see price trying to, after it took down this internal liquidity, yes, it came down to sweep this low in here, this swing low in here. Okay, so now watch this. Insofar as you had this kind of swing low in here, yes, this becomes another block. So you should be careful, not say that day 1, day 2, day 3. So you want to take down this low. No, look at the chart well. It has taken internal liquidity. Okay, day 1, day 2, day 3. It took down internal liquidity, formed this, and then as it came down in here, okay, as it came down in here, the traded into this how do we call it, fair value gap in here. All right, and then obviously you are expecting it to, after it took down this internal liquidity, you're expecting it to take some external liquidities, so it had to trade below this low, and then it rallies up. And as this price action is happening in here, you should know that liquidity is being engineered, especially after an order block. Liquidity was being engineered in here, so these are low resistance liquidity which can be taken down later, in later time. Okay, so when price is engineering liquidity, your eyes should be open to see those form of liquidity being engineered. So you will realize that this low in here and this low in here, this is much lower than this. Okay, so it had taken a low, okay, just below, just after the other block. And what do you expect? Day 1, day 2, day 3. So we have a swing here into another block, and then day 4, boom, it goes up. So this is how to trade off the power of 3 that I made mention in my previous video. All right, now price shoots up into this area, closing in more further on the fair value gap. So price has traded back into this other block and then goes up further, and then price comes back again into this area, forms a high in here, and then it goes to take this high, goes to take this high, goes to take this high. Okay, so now these are also engineered. You may see that this is also low resistance liquidity, relative equal highs, and then price trades above it. Okay, taking down this external liquidity. So what does price do? Price trades back into this other block resting in here, and then it doesn't trade below the low in here. Okay, yes, it did trade below the low in here, so it took down the liquidity resting below this low. All right, if you go down further to the lower time frame, you may find out that maybe perhaps there are some internal liquidities in here that price really took down. All right, and then price, what does it do after it took down this low? So it goes back into this area, take this internal liquidity. So as you are saying that, okay, price has taken a high, so why didn't it take internal liquidity? Yeah, it did take internal liquidity resting in here. Okay, it took internal liquidity resting in here. So as it was coming down, this internal liquidity was taken. So the next call of action was an external liquidity. It took this external, and then it came to take this external as well. On the lower time frame, you may have find some internal liquidity resting in here. Okay, price takes down the internal liquidity, comes to take the external here, rides up to take all the internal liquidity resting here and here, all the imbalances. And then afterwards, what happens? It trades back into this area. On the smaller time frame, you may find some internal liquidity resting in here. Okay, and anytime you have price, try not to do what, as for instance, if it has taken an internal liquidity and you expect it to take external and it doesn't, look at what price will be forming. So either price is engineering more liquidity. So you could see that price was engineering liquidity in here. Okay, engineered liquidity in here and here as well. Then what price do? Price, after it took this, engineered this liquidity, it traded down, took a low. Okay, and then it came down further, and then it took this low as well. Now you sort for internal. So this is the internal liquidity resting here. So price trades back into the internal. It goes up, takes an external, and then comes down again. So in as much as it came down, when you don't see any form of internal liquidity that is taken, then it means that we are engineering more liquidity. All right, price engineers liquidity in here, and then it breaks down further, taking down all these lows. And then where is the next target? The engineered liquidity has been created in here. It's round. Okay, it's round with this upward movement in here into this particular candle, and then we have a breakdown again. So it has taken an external liquidity up here, took all this engineered liquidity resting in here. Then price breaks down further, leaves all these external liquidities. It has taken external liquidity, so it leaves all this, and then it comes back to take internal liquidity, and then it attacks external, goes back into internal, and then it comes back to external, goes into so as it took down internal, it comes down, forms a low in here. Okay, rallies up, takes down this as it formed a low in here, it took down this, it went up to take down its internal, it comes down to take this external, and then it goes up, take this internal, goes to take this external, then price rallies up for this external and this internal in here. There's an internal here before this external, okay, before this external high in here, then it rallies up after the external, this internal, then we have external, then price rallies down to take all these internal liquidities. As it takes down this internal liquidities resting in here, it rallies up again into this area. Now as it's doing this, you see it took that internal and it's supposed to take an external. That's what we're expecting, right? But it rallies back here, so here it will engineer some liquidity external, sorry, it will engineer some liquidity for price to run. So here we have another block resting in here, so price is going to engineer some liquidity, then probably we see price trades off all those short-term external, sorry, liquidities, okay, and run all the lows that may be formed. So beautiful. That's how external liquidity and internal liquidities are engineered. So look at this. So when price took down this high in here, day 1, day 2, day 3, day 4, boom, external liquidity taking, we sought to take internal liquidity. Okay, now what happened here too? Day 1, day 2, day 3, day 4, boom. So here you notice that it has taken an external liquidity. So beautifully, this is how you'll be able to identify. Watch this. Now I don't really want to trade off when it comes to price taking internal liquidity. So watch this. Day 1, day 2, day 3, day 4. What do you see? Price rallies back up. On the smaller time frame, you may even find an external liquidity that price has taken on this. After it, you find it closing in on this fair value gap. Okay. So now let's look at it on the 4-hour time frame. You realize that price had taken down an external liquidity and it rallies with it. All right. So that's how the market is actually operating. Okay. So now let your eyes see the external and the internal liquidities, so that you can also frame your power of theory around that same premise. It will give you more profit than you'd even imagine. Okay. So until we meet in the next video, I'm going to bring you more educative videos. Right. Until we meet in the next video, I would encourage that you do like the video if you really like it, and then give me a thumbs up. If you are new to my channel, please subscribe for more. These kind of strategies can be used on every asset pair, every single asset pair. Okay, every single asset pair. So I encourage that you stick to my channel and then watch out for more videos to enhance your trading. I wish you all the best in your trading and enjoy the rest of your evening. Stay blessed.